Hello, good morning, everyone. Good to see a few of you on this morning. As always, hello and good morning, good evening. To Kevin, though, he's all the way from Florida. Mate, good to see you. Paulette. We've got James. We've got Nev. How are you, mate? There's Luke. And there's Mick. How are you, buddy? Someone in behind the veil, fellow Facebook user, and we've got Donna in there as well. Hey, good morning. Some interesting, maybe even exciting news coming our way, folks, and it's another one of those. It's not I told you so, but this is kind of what happens. Things go up, things go down, things change, and got wind of a little bit of potential opportunity change into the future that we might get a little bit excited about. Now, it's not being done for us, by the way, but we're going to be able to take advantage of it. So we might have a bit of a yak about that in a minute. While things are warming up, though, I'll just quickly do the intros as I always do. Jason Whitman, my name. If you didn't already know, there it is on the screen. Hello. How are you? If you're new. If you're new, say hello. Let us know. If you might have just joined our mentoring and coaching program, you might be finding us randomly somehow. And if that's the case, hello, good morning to you. Thanks for joining. We've been doing this for a while, Wealth Coffee Chats, each day at 8:10. I've been property investing over 20 years. Actually, more than that, coaching people over 20 years. Done a few things, done a few deals, helped a few people learn a few things along the way. And along the way, decided that I'd help and teach people maybe to go the distance in this thing called property investing. We've got a few sayings around here. This thing's a marathon, not a sprint. Property is a get-rich-slow scheme. If you're looking for get-rich-quick, it ain't property, and it certainly ain't what I do. So move on. Nothing to see here. If that's you, nothing to see here for you. But if you want to understand real estate investing in Australia, residential real estate investing particularly, that's what we do. Other than that, let's get on with the show today. What is going on? Best finance news so far this year. Anyone know what that might be? Chuck it in the chat. Do you think you know what the news is? It's a bit it's a bit tricky, but anyway, let me know in the chat. Do you think you know? Does anybody know? Any got an inkling what might be happening out there? Some new hey, Innocent, good morning to you. What do you think, folks? What is going on? What do you think might be happening? Anyway, it's a bit industry insider stuff, but maybe on the street, you're not going to know. Better lending coming our way, yes. That will certainly be something. Interest-free loans. Interest-free loans for everyone. No interest ever. All right, let's do this. Let's have a chat this morning about what is going on out in the world of finance. But let me lay the scene first before I give the answer away or set things up here. You know, what has happened over the last little while, we've all been experiencing this one, haven't we? We've all been experiencing the fastest the fastest cash rate increases ever in Australia's history. 10 rate hikes quite fast, which has been a bit of a shock. Shock for some people, but was to be expected, wasn't it? None of us were sitting around going, you know what? Interest rates are going to stay down at 2% forever. No. Are you kidding me? That's crazy to think that, folks. That's crazy to think that. But anyway, the cash rate's up. It's up at 3.85 at the moment. Is it isolated? Are we the only people in the world? No. Everyone's putting their cash rate up. The world reduced it to stimulate economic activity. And now it's increasing it to try and hold back inflation. Very annoying. I don't know the details down in the detail of all that stuff. That's for much smarter people than me. Someone like Andy Fenton and his crew would be able to talk about why and how and whatever. But the point is, what does it mean to you and I as property investors? Well, it has affected the interest rate, right? It's just pretty simple. Our interest on our investment properties have gone up. And our ability to borrow more to purchase more properties has gone down, right? That's the annoying part of this whole process. What's actually happened? Now, this is a chart. I think I showed it the other day, but this is for owner-occupiers, right? And you can see back in 2000, the buying spending capacity and the median house price was a lot closer together. And you can see gaps in here. You can see gaps in between, the house price and the ability for someone to pay for that house price, closing and widening because of the cost of interest, right? Interest rates, right? So right now, folks, we've had a pretty nice little run in the last little bit. The last 3 years, values have gone up, last 3 years. And by also at the right time, starting in October last year, 2022, interest rates have gone up. So as interest rates go up, our ability to borrow goes down. The largest gap. Now, I say this all the time. It sometimes sounds a bit dramatic, and it may or may not be accurate. So I'm not going to be held to this one perfectly accurate, but it's the largest gap we've ever experienced on this chart anyway, right? The largest gap. And you can see, folks, it's the size of that gap between the average house price and the average person's ability to borrow is big. It's huge. It's massive. It's double what it's ever been on this chart, and maybe even previous. Maybe even in history. Dun, dun, dun. What's happening? Is this sustainable, right? Tell me, what's your experience out there in the world of finance right now, folks? Literally, what's been happening? How hard is it? It has been much more difficult to borrow. And you can see very easily why in the last, let's call it 12 months, that's kind of a 12-month period, why it's been difficult to borrow. 2 years ago, 3 years ago, you could borrow $1 million. And now some people can't even borrow anything. What is happening? Is this sustainable? Is this going to be what it's going to be like for the future? Now, one thing I do know, this is the challenge this is the challenge, team. This is why it's difficult to borrow. Yeah, for sure. Like, this is why you got to stay connected and listen to people who've been in the industry. I've been in this spot before, come back here. Look at this. Remember this little section here? The GFC, same sort of thing. Have a look at the gap. Have a look at the gap after the GFC. Look at the gap, right? Big gap again. And then it closes. Why does the gap close? What happens? Well, setting this up right now, dragging it out a little before I tell you what's going on. Why does it close? What happens? How does this close? Well, the parties involved in this process are twofold. Who are the parties involved in the process of closing the gap, folks? Closing the gap of, closing the gap of the ability, the median house price, and the ability to borrow to afford the median house price. Who is involved, right? Okay, let's have a look at this, because I need to set the scene so we understand my conversation today and what it means to us, right? We've got, number one, we've got APRA, all right? Number two, we've got the Reserve, the RBA, Reserve Bank of Australia. And number three, we've got the banks themselves, all right? The banks themselves, all right? And why is this gap so large? And we're going to talk about that in a minute. Why is that gap so large? What happened? What has happened in recent times to make that gap so large, and why that gap is going to change into the future? We're going to talk about that. We're going to talk about that. So we've got these three parties here. They don't give a rat's ass about any of us. Their job is to make profits that's boom. Timmy, you're on it, mate. You're on it. We're going to talk about the 3%. Tim, yep. That's right, Luke. And what we're going to talk about in a second is the lenders are going to make less money if this keeps going, right? Plus, they have a problem. They have a problem around the corner, folks. What is the problem that they want to navigate, launch across, make money? Because, banks aren't charities. They're not. They're here to make profit out of us. And mark my word, folks, they don't give a shit about you. They don't give a shit about you, okay? They don't care. The people who work there, lovely people, beautiful, amazing people. I know some amazing people. But the institution doesn't give a shit, right? All it wants to do is make money out of you. Anyway, that's just the way it is. Don't get over it. Yep, mortgage cliff. Luke, mate, I'm going to hand over the morning coffee chats to you, Luke, because you're on it. You're all over it, all right? And so is Tim. All right, here we go. Yeah, I gave enough away. So they've got a problem, folks. The banks have a problem, which is happening right now, which is the share of mortgages. A large amount of fixed rate mortgages are maturing and coming off of the 2%. And, what interest rate are they going to, team? Like, they're going to from like 2% to, let's call it, on average, 6%, a 4% increase. Huge, right? Or even more, because when you change from when you switch over in an existing loan product, this shits me to tears. You got to know this. An existing loan, right? So if you're going from 2%, and the existing loan goes to 6.5%. So you stay in the same loan, right? This is why apathy, listen to me. Apathy for us, if you're lazy and you go, oh, don't worry about it, I'm not going to make any effort, you're going to lose money. The banks are going to jam you. They're going to shaft you, okay? Because what happens is this, folks. 2% goes to 6.5%, right? Okay, that's for an existing loan. But tell me, in the chat right now, what happens if you're a brand new customer? What would be your interest rate, folks? What would be your interest rate? Yep. I know brand new customers are getting 4.9% interest, right? Well, why don't they just let the existing customer go to 4.9 because and they're not. They're pricks. End of story. So what's happening? What's the opportunity and what's the problem here for the banks, folks? Let's talk about this, all right? So they've got a problem and they're going to take advantage of it, okay? What does everyone want to do when their loans become too expensive? Loyalty means nothing. Exactly, Sam. They want you to be loyal to them, but they don't give a shit about you, right? That is that is a problem. Yeah, and Sonia, absolutely. Some will drop the interest rates. That's why We've if you're in the mentoring and coaching program, folks, make sure you log on to the online learning center and go and have a look at the 1 hour coaching program that the coaches put together about negotiating existing loans down. Okay. Go listening to it. Boom, Tim, you're on it. We'll all want to shift to a cheaper loan, right? A cheaper loan. Boom. So tell me, all right, your interest rate's coming off 2%. It goes to 6.5. That's pretty expensive. You know that other people are getting a 5% loan. You go, shit, I better refinance. Okay. I better refinance. Boom. Allison, you're all over it. That's fantastic. That's a good rate till 2024, babe. I think you're going to be in good stead. So you want to refinance. What do? You go to the bank and say, hey, refinance me. I want to get a refinance. But what's the problem? What's the problem? Tell me. This is the big aha. Everyone wants to get a refinance. They go to the bank and say, refinance me because I need a better loan. And if they refinance them, folks, what happens? Tell me. With the lender, if they refinance them, what happens? On their balance sheet, on their profit sheet, right? They make more money. Their borrowing power has decreased. Exactly, Sam. Because of what? It's already like they can't service the loan they've got because the interest rates have gone up, and more importantly, the assessment rate, which is the 3% risk rate they put on top, is ludicrous. It's ludicrous. You know, they're servicing you at a ludicrous rate. So let's have a look. So they've got a problem, and it's going to go, hopefully, in our way for them to solve it so they can make more money, and hopefully we can be better off. Have a look at this, and this is one of the very cool tools that we use, our finance team use to help you with your finance. But have a look at up here, what's called, listen to this, look at this, folk, the assessment rate. Assessment rate. Hopefully you can see where I am. I've just put a random make-believe person in here. Okay. Tommy Test. So you're trying to refinance, you're trying to reset, you're trying to make sure you sort yourself out for finance. And when you qualified for your loan, the interest rate was, let's say, and it was still 3% back then, but you go 2% plus 3%. What's the interest rate for qualification? 5%. Now, for you to qualify for that loan, it's 9.44. And have a look down here. Some of it's 10%. You know, I saw one. Yeah, look at this. Look at this. 11%. Folks, seriously, who's going to, like, off the charts, right? Okay? Off the charts. So what's going to happen? What's a foot? Well, here's what we know about what's a foot. I could have just told you straight up, but I needed to build up the reason, the why behind this, right? What the banks and lenders do know, there's hardly anybody in negative equity in lending in Australia. Hardly anyone, which is great news. Okay, great news. There was more people in negative equity in the GFC, which wasn't large then, but the percentage is super small in Australia right now. Most people have got lots of equity. A lot of people have got prepayments. They've already prepaid a lot of their mortgage. They're in advance. So what are they going to do? Let's talk about this. The assessment rate is being reduced, or it is about to be reduced. A couple of the banks have come out saying the assessment rate on refis. Now it hasn't been said on a purchase just yet, folks. So the assessment rate on a refinance is being talked about, reducing it so people can refinance, can reset their lending, can reset their mortgages to a better product, a better interest rate. The assessment rate is being posed to drop it from 3 to 1%. And we understand that a couple of the major banks are going to have that up and out and running within the next 2 to 4 weeks. That, folks, that which is brilliant based on or having a look at the forecast of the future, ladies and gents, the cash rate will go down, right? It will go down once inflation is sort of sorted out. Who knows how long that's going to take? We thought maybe the RBA had paused it a little bit, but they, gave it another little kick, 3.85%. Other lenders think, it might be up around 4. But anyway, it's not going to 5 or 6 at this point in time. So what does that mean? Well, we're sort of reaching the height of the cash rate. They're dropping the assessment buffer, which is great news. And at some point in the next 12 to 24 months, we shall see interest rates go down, right, as we go. There you go. So anyway, good news, great news. Could be the best news in finance this year. We shall see. But the point of this, folks, is these things, these challenges, these issues that we feel as property investors or any mortgage holder feels don't last forever. They don't last forever. By and large, interest rate issues in the negative, as in gone up and causing you grief, tend to take anywhere from 18 months to 3 years to wash through and balance out. Right now, as property investors, our rents are going up. Over the next 2 years, your rents will naturally increase to offset the cost of interest. That's what happens. And it's still going to happen. And if the rents go up and the interest rates go down and the cash and assessment rate goes down, then, at some point in the future, we should be on the right side of the ledger, in the positive rather than the negative, and that's the way it rolls. Anyway, good news. Spread the word. Keep an eye out for it. It's not here yet. It is coming. I've heard it on the professional grapevine or grapeline. Is it the grapevine? On the grapevine, isn't it? Not the grapeline. Anyway, there you go. That's it from me, folks. Wealth Coffee Chat done and dusted. I'm not around tomorrow, so no Wealth Coffee Chat tomorrow, folks. And I'm down in Sydney commentating the Australian Youth Climbing Championships. If you're interested, find me on Sport Climbing Australia, YouTube or Facebook. I'm the commentator, the official one. Anyway, I'm the only one, but there you go. I'm the official one. Anyway, folks, that's it. I'm done. You guys have an awesome weekend. I'm not around tomorrow. So great to have you on. You guys be good, be well, take care. Remember, a couple of sayings around here. This thing's a marathon, not a sprint, remember. Going to take time. A little sneeze. All right, that's it. I'm going. See you, folks. Take care. Bye for now.